Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the overnight sell-off on Tuesday, the price action for Wednesday is a little bit firmer due to the long-legged doji that's given us some indecisiveness in the downward challenge. With the market still looking as a short-term base around 71, 30, 40 area, we can see that the bulls are coming back into play as it tackles challenges the level of 72.2025. In light of the pattern, I'm not overly confident that this rally will sustain, and therefore, although we may see a break above 2025, it will find further difficulty in challenging the top side here around 70 area. Let's see if the market does get a rejection from here, as we could still see a down test at this present stage. The euro is attempting to stage a little bit of a further recovery since the overnight challenge rejected the top side around 110, 10.15. But the market still got his eyes on that level, and the RSI is strengthening up slightly. Along with that, the dollar index, which measures the greenback strength against a basket of 6 major currencies, has actually dropped away just slightly. Ahead of the US Federal Reserve rate decision, the market may be a little bit whipsawed in the next 12 hours, as all eyes look towards the Fed to see if we do get an interest rate hike of 25 basis points with some gossip of 50. I feel the market might be looking at 25 and therefore could see a slightly softer landing from the US Federal Reserve. If the market does reject that top side anywhere from 110, 10.15 and with the cap around 111, should eventually see the test back towards the support where the base holds around 107, 50, 85. The dollar yen's put a bit of a pause on this upside rally, or near the 5-year highs around 118.55 to 85. From there, the market should find a bearish ambush if challenged with this hanging man to the candlestick, that is the Japanese candlestick, could see a downward turn back towards the mid 117 region as we are extremely overbought. Since the bullish divergence kicking in, we're seeing that we've got an inverse hammer, and also the market is slightly firmer into the Thursday coming of the Bank of England's rate decision, where there is expected a 25 basis point hike. That could see the market move to 0.75. Therefore, could see a little bit further in terms of strength from the British pound, and therefore see a rise up towards the 131 region, which I'm in favour of as the technicals are strengthening. And with some of the crosses also strengthening, the sterling Kiwi is still holding a somewhat bullish pattern since the divergence come in quite firmly, and the rebound of 190 figure 25. I'm still looking up towards 194 as a potential target and reassess from there. In the last 3 days, gold has dropped over $80 and therefore looks towards the last support level I'm seeing around 1,900. Now, a break of that would give further indication down towards 1,800 and 70.80 level, another $30 off this current fall. Technicals have still got a little bit more room to the downside, so let's see how the support holds at 1,900. And wrapping up with oil, well, since the break at 100, the market's still focused on that $88 level, even though we're seeing a small recovery into today. Overall, though, with the cap around that 100 to about 104, the market is destined towards its bottom side, I believe, at 88, and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.